Hi traders, Nathan Bray here from ACY Securities, and welcome to another episode of Talking Trading. Now today we're going to have a look at the performance of some of the key levels that was broadcast out to you live on our live interactive trading feed. Now joining me to discuss the performance of these key levels and to look at the market today and for the week ahead is our own senior market strategist, Duncan Cooper. Now, Duncan, a few days ago, you broadcast out a key level on this 119.33 on the pound US dollar. Now, take us through the entry on this trade, the logic behind it, and how it performed.
Yeah, so on Wednesday, we had the UK GDP figures coming out 4 o'clock in the afternoon. So ahead of that time, I was looking at the chart. So it's this day here where the blue candle is. And price was below this broken level of weekly support at 119.33. So I was looking at the level for price to maybe pop up to that level if the news was positive. And it was, I believe, positive. Well, price popped up anyway to that level. So let's just drop down to the 15-minute chart and see what did happen during that trading day. So it was on Wednesday. And if I scroll back, we also had the US CPI data come out later in the day. So this was when the news came out from this 15-minute candle, and that's the level I was looking at, 119.33. It was also last month's low. So it popped up and obviously came down. And then when the US CPI data got released later in the day, we were already at that level, and obviously we fell down from that level. Then we came back up
very drastically
through New York, got a little bit above there for a while, and then came back below, and once more it became resistance later in the day for then, a further move down. So that level was obviously being clearly watched around those news items. Yes, it got a little bit above, but once the volatility of the news through the day dropped, you can clearly see there that that broken level of weekly support became resistance for the market, and it was a good key trading level to watch to try to structure a trade around to move down. Because over the last 48 hours, from that level into Thursday's trading, we moved down about 170 pips from that level. So it was definitely a level the market was watching for resistance, and hopefully some of our traders traded around that level and had a good trade.
I know I certainly did, and however, I did get taken out break even when I went to bed with that volatility. Is the best thing to do there, Duncan, or have you found it, consistent with your trading where you wait then for it to fail underneath that level again? Or is it one where you just need to give yourself room around these news events as far as your stop loss goes?
Well, I know you were in it, and I know you told me you told me you got to break even. I think at the end of the day, when news drops price down here, and you're potentially up, at the low here, you're potentially up. It's dropped 100 pips from the level. You'd be anticipating that this might now want to move further down. Of course, it does, and it whipsaws all the way back up. But
sure,
at the volatility times, when the news is there, you have to manage the risk first and foremost. So if you're up 100 pips on your trade, do you want to let the trade go against you? Probably not. So if you got whipsawed out from that level, it's just unfortunate, but it was a good level to trade around. And obviously later in the day, in the New York session where we were asleep, it offered you, the potential for a trend line break opportunity to trade down from the level. But
sure, failing underneath it like a head and shoulder type pattern.
Yeah, that's right. But for you were probably asleep then, and then you wake up the next morning thinking, oh, I've got whipsawed out, I was right, and I missed the second opportunity to get in because I was asleep. But that's how trading can go sometimes.
Well, the worst part is I just look at the price and think, oh, it's gone down. And then I go and look at my trade and say, oh, no, but it's shot up when I actually get a chance to look at a chart, and then it's come back down. So that is going to be the nature of trading. But when you look at it in the bigger picture, you can see how it only moved up about 30 pips above that key level
before it failed. So depending on the strategy that you might have in place as a trader, if you're short-term trading, it might only be, you might only be risking 20 or 30 pips. So you might have been stopped out. But if you're looking at a longer-term play over a number of days, you might reduce your trade size and have, say, 100 pip stop, which would have kept you in that trade.
Yeah, that's right. If you were more positional playing and you used 100 pip stop at that level, then of course you would have been able to get by the whipsawing and still be potentially in the trade. So it all depends on your method of entry and risk approach.
Brilliant. Now, just to look ahead now, if people aren't in this trade, I know I'm certainly not in this particular trade. So can we go back to the daily chart?
Sure. Let's get rid of that.
So back to the daily chart. So that previous daily support, which was lower, is that where, I'm looking at that level now and saying if the trend is continuing, if it fails underneath that new support level, if you can just draw that one in, is here a spot where I might have a look at it and say, well, is there a potential trading opportunity to get back into this trade in line with the trend?
Yeah, sure. I mean, the trend is down, lower tops and bottoms.
Mm-hmm.
We've now broken below this day support low. So now logically looking to trade down from the last broken level of support to be new resistance. So, it's up here. It's actually last week's low as well. So, 118.76, I would be looking at that level now for rallies to fail at through, maybe through today and into next trading week.
You've got daily support, you've got last week's low, and it's already failed a few times over the last couple of days.
Yeah, you can see yesterday how it was becoming intraday resistance. So it's proving to be resistance already, yesterday's trading. So if it got back up to that level, I'm sure you'd start to see a bit of selling pressure around there, and then you can look for an opportunity to trade.
No problem at all. Thanks for your time, Duncan. And remember, folks, if you're not already involved in our live interactive trading feed on Telegram, please shoot me an email to nathan.bray@acy.com. Be more than happy to add you and get the live broadcast out to you. Thanks, everybody. Happy trading.